Hello everyone and welcome back to my new video. Tesla, which is the target of several regulator probes, will recall nearly 54,000 cars due to problems with its self-driving software. Tsla stock fell Tuesday. The National Highway Traffic Safety Administration said late Monday Tesla's full self-driving software allows some models to conduct rolling stops, allowing the vehicle to travel through an all-way stop intersection without first coming to a stop, increasing the risk of a crash. Shares of Tesla found themselves under strong pressure amid strong sell-off in equity markets. The stock has already bounced back from the $850 level to the $900 level, but it remains well below the previous close near the $944 level. Other electric vehicle stocks like Rivian and NIO have also moved lower today. Both stocks are down by about 10% today. The reason for this sell-off is the continuation of the move out of high PE stocks on fears over rising rates. S&P 500 is down by more than 10% from all-time high levels, while the tech-heavy Nasdaq has already lost more than 15% of its value. The NHTSA report said Tesla will perform an over-the-air software update to disable the rolling stop function. The function, part of Tesla's assertive mode, was released in October and was only supposed to engage if there were no vehicles, pedestrians or cyclists in the vicinity. But failure to stop at stop signs is a violation of state laws. The recall includes 53,822 autos from the 2016 to 2022 Model S and Model X lines, 2017 to 2022 Model 3 line, and 2020 to 2022 Model Y line. Tesla also issued a recall in November due to another software error that could cause the activation of the emergency brake. The upscale automaker has faced a flurry of safety recalls and investigations in the last several months. In December, the NHTSA acknowledged recalls for some Tesla Model 3 and Model S vehicles. Over 355,000 Model 3 vehicles could have their camera cable harnesses damaged by the trunk lid, and nearly 120,000 Model S vehicles have their front trunk latch misaligned. The NHTSA opened a safety probe in August into Tesla's autopilot system. The agency is looking into 12 crashes that involve Tesla vehicles using the Advanced Driver Assistance Systems and emergency vehicles. The agency is also probing Tesla's option that allows passengers to play games on the front touchscreen. And regulators have been critical of Tesla's use of non-disclosure agreements with its beta FSD test drivers. The NHTSA called the NDAS unacceptable, saying it relies on reports from consumers as an important source of information in evaluating potential safety defects. Despite the recalls and investigations, Tesla last week reported strong fourth-quarter sales. TSLA stock falls. Shares dipped 0.6% to $931.25 on the stock market today. Tesla stock spiked nearly 11% on Monday. TSLA stock failed an early January breakout attempt from a double bottom base. The stock has since rebounded from its 200-day moving average, according to MarketSmith analysis. Tesla's relative strength rating is 83 out of a best possible 99, while its EPS rating is 73. With a composite rating of 93, Tesla currently ranks No. 1 in IBD's auto manufacturers group. Tesla shares dropped more than 11% in Thursday trading after the company said it would not produce new model vehicles in 2022 and is not yet working on a hotly anticipated $25,000 electric car. CEO Elon Musk broke the news to shareholders on a 2021 fourth-quarter earnings call after trading on Wednesday, noting that Tesla is still dealing with chip shortages that are expected to linger throughout the year. The announcement dampened investors' hopes that this year would see Tesla begin to deliver on its sci-fi-inspired metal pickup, the Cybertruck, which it unveiled in November 2019, and the Semi, a heavy-duty truck, which it announced in November 2017. Executives instead said that Tesla will focus on scaling production at its new and existing factories, and on improving its driver assistance technology currently marketed as a standard autopilot option, as well as its premium option brand, Full Self-Driving. Bernstein senior analyst Tony Sacconaghi asked Tesla execs on Wednesday's call, if there is no $25,000 vehicle being worked on, is it really realistic to think that you can sell more than 3 million vehicles with two very high-volume cars and Cybertruck in 2024? Musk peevishly replied, I mean, It is apparent from the questions that the gravity of full self-driving is not fully appreciated. Musk then explained that Tesla's driverless tech should eventually be so advanced that it will drive sales of the company's electric cars to the anticipated high volume of sales with or without adding new models at lower price points. Tesla's cars are not considered driverless today, even with the company's premium system. The systems have been categorized by Tesla as Level 2, meaning that they don't meet the SAE Level 4 inches standard used to denote a car that could handle every aspect of driving in some conditions without any human intervention. When Tesla began to discuss its ambitions in self-driving technology in 2016, Musk said the company would conduct a hands-free trip across the US by late 2017. It has yet to complete that mission. During the call, the Tesla CEO said the company plans this year to invest in research and development on a humanoid robot to work in the company's factories. The most important product development we're doing this year is actually the Optimus humanoid robot, Musk said. This, I think, has the potential to be more significant than the vehicle business over time. Despite the decline in Tesla shares on Thursday, many analysts remain bullish and focused on the company's lead position in the battery electric vehicle market, a growing and increasingly competitive industry segment. For example, Deutsche Bank research analyst Emmanuel Rosner wrote, "We continue to believe Tesla's impressive target trajectory for its battery technology, manufacturing capacity, and especially cost could help accelerate the world's shift to electric vehicles and extend Tesla's EV lead considerably." The firm is maintaining a buy rating and target price of $1,200 for shares of Tesla. Goldman Sachs' Mark Delaney reiterated a buy rating and a price target of $1,200 in a note on Thursday, emphasizing its automotive margins had reached a reported 29.2% in the fourth quarter, and it expects sales to grow this year more than 50%. Tesla continues to be one of the fastest-growing companies in the automotive ecosystem, he said. On full self-driving promises, Goldman Sachs analysts sounded a cautious but hopeful note. Management reiterated its optimism around deployments and views software as an important part of its future profit and value creation. While we remain guarded on how quickly the company can achieve full autonomy given the delays the industry broadly has encountered historically on, we believe that Tesla remains well-positioned to be a leader in AVs in the long term given the broad range of technology and resources it is devoting to this area. What's next for Tesla stock? Analyst estimates for Tesla earnings continue to move higher. Currently, analysts expect that Tesla will report earnings of $9.04 per share in 2022. So the stock is trading at almost 100 forward PE. It should be noted that earnings estimates for 2022 have improved by as much as 16% in the last 3 months, which explains why the market is still able to tolerate the sky-high valuation despite the huge sell-off in the high PE segment. However, Tesla is not immune to market trends, and its stock is down by roughly 25% from the highs that were reached back at the beginning of this year. It remains to be seen whether speculative traders will rush to buy Tesla shares after the recent sell-off. The company remains richly valued, and if the market remains focused on risks, high PE stocks will continue to suffer. It should be noted that Tesla will release its fourth quarter report on January 26th, after market close. Thus, traders will soon get more data on the company. In case the report exceeds analyst expectations, and Tesla's guidance is optimistic, the stock may break the current downside trend despite the global move out of riskier assets. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, and don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.